We are live. Welcome to the Deal Champs podcast. We have an awesome guest today. Oh no, you guys lose me. Oh
What
no,
a start.
what a
What
Yes.
a
start.
start,
I'm
dude.
back.
Oh
I'm
my
back.
God. He's
Obama
back.
I'm back,
internet is
boys.
back.
Good
Yes.
Bro,
Lord.
I fixed
Got
my
him.
internet. I don't pay for Obama internet anymore. We have that Xfinity. I should just switch to Starlink because I'm a pure-blooded American.
That's
But
good.
Yes.
we are back for the next Deal Champs pod. We have an amazing guest on today. Real quick, my name is Stratton Brown. I've scaled two different companies to seven figures. We own seven figures worth of real estate. And I got started with no life skills. Real estate absolutely changed my life. I don't know where I'd be without it. We have the master of hair right here, Mr. Jason Pritchard. Hair out.
Hair is out today. Welcome, everybody. Thank you for joining us. I'm your other co-host, Jason Pritchard. Quick backstory on me is I worked in corporate America in sales and sales management for about 15 years. Hated my job, was unhappy with my life. We burned all the boats in 2014 and got full-time into real estate investing. We've done close to 600 deals. I own a real estate portfolio. It's about $17 million here in California. And our goal, as always with this pod, is to share our real life experiences so we can take your guys' learning curve and compress it like this. We got an amazing guest on today. Robert is a legend in our business right now, so I'm sure we're going to learn a ton from listening to him. So thank you for joining us, Robert. Appreciate you, man.
And
Thanks
we
for having
have,
me on.
there we go, Mr. Captain America, Dean Rogers.
What's up, guys? Dean Rogers, your other co-host. Excited for today's episode. As you guys probably know, started my career in the NFL. Then I transitioned to corporate, then into real estate. Been doing that for over a decade now in Central California. We've done over 750 plus deals, have an 8-figure rental portfolio, and coaching students how to get started in real estate with wholesaling. You guys can always connect with me at deanrogers.com.
And Rob, we give everybody a nickname. Your nickname has to be the master of self-confidence. I've never met a more self-confident motherfucker in my life. The
I appreciate it.
CEO of Investor Lift, the master of self-confidence, Mr. Robert
Yes.
Wensley.
Hell yeah.
I appreciate it. Thanks for having me on, brother.
Hell yeah, bro. Thank you so much for coming on. Give us a quick intro about you, your story, and everything else, and we'll dive into everything else.
Yeah. So we're basically the Zillow for trap houses.
For real.
Got into this game about 10 years ago. Did my undergrad at Harvard in finance and economics, and my dream at the time was to make 6 figures a year. You know, like back when like 100. We were just talking about this the other night. Like back when like 100 grand a year was a lot. You
It was
know,
a big
we were
deal.
like, it was a big deal. It's like I'm
I
gonna
told
get a
myself,
good
if I just make 100
education.
grand, I made it, right?
Yeah, right. So I was like, yeah, I'm gonna go get a good education, work in finance, make 6 figures a year. And so I do the whole like get an education, go to good university, study hard. And the pinnacle, you know, everyone goes into finance. The pinnacle is like if you can get a job at Goldman Sachs.
Yeah.
So I get an interview with the vice president of Goldman Sachs. It's only supposed to be like 30 minutes. We end up talking for like 3-4 hours.
Mm.
At the end of the interview, he's like, Robert, I would love to have you on my team. We spent hundreds of thousands of dollars trying to recruit guys like you. You would be an absolute rock star. But you, Robert, you're an entrepreneur. So I'm going to give you a job offer. That job offer, I would have made like, 150K plus a year right out of school, the dream job. So I'm going to give you a job offer, but please don't take it. I'm like, what? What do you mean, please don't take it? I've been working my whole life to get to this spot right here. So, Robert, you're an entrepreneur. When I graduated, a third of the graduating class goes into consulting, a third go into finance, and a third go and do something else. And when we go to the 5th year graduation, us guys that went into finance, we're buying our first Porsche, we got our luxury penthouse, we feel like we're on top of the world. There's this other group that goes and starts businesses. And the guys that go and get into entrepreneurship at the 5th year anniversary, they look like idiots. They still live in their parents' houses. They're driving a 98 Toyota Corolla. And we're like, wow, these guys really screwed up their lives. But then you fast forward to the 10-year anniversary. And by the 10-year anniversary, we're working for them. We're managing their money. We're selling their companies. So he said, I'm like, but I don't have an idea of like, what, like, I don't have like some burning idea of like, something to go on Shark Tank, but then create a company around it. He's like, that's fine. Just go work for a small business in an industry that hasn't been disrupted yet by technology. Go work for 3 years. Look at that as your master's degree. And then after 3 years, then go out and start your company. So I went home, I thought about it, and I decided, hey, this guy, he's got a lot more experience than I have. You know what? Screw it. I'm young. I can take risks while I'm young. Turned down the job offer, said thank you. And then I was thinking about industries, and I was like, I always like real estate. Real estate hasn't been disrupted yet with technology. Let me go try to do that. So I started cold calling house flippers. And of course, like no one answered. They all probably thought I was a VA because I was so bad at sales at the time. And finally, a guy named Brad Chandler in Washington, D.C., he took my call. I went and met with him at his office. He's like, I'm not hiring right now, but I can always use more salespeople. And so I joined his sales team back in 2015. And I did 1 day on sales, 1 day. At the end of the day, he calls me to his office. And I paid my way through school by flipping websites, like building websites, cranking up the traffic, and then reselling them. So I was pretty good with tech. And he said, how did the first day go? I said, Brad, I can make you a few $100,000 a year on sales, but your marketing, your tech sucks. Let me fix it. If you let me fix that, I'll help you make a few $1 million a year. So he said, okay. And started working on his marketing and tech. And we went from doing like 5 or 6 flips at a time to by Christmas, we were doing probably 60 at peak.
Wow.
We had so many houses. One time we forgot we even bought a house. We got a letter in the mail from a code violation because we didn't cut the grass. And we're like, oh shit, we got a hard money loan on that thing at 10 and 2. Like, oh, whoops. So that first year, I did a good job. I made the phone ring, but the company grew way too fast. We were flipping everything. And if you are doing 5 or 6 flips at a time, it's easy to keep stuff on budget, on timeline. If you're doing 60, it's almost impossible. So that first year, I thought we were going to make all this money. And I remember like right before Christmas, walking past the CEO's office, and him and the other co-founder were talking about like, who are the few people we're going to be able to keep because we're basically out of cash. And I'm like, shit, I screwed up. Should probably taken that Wall Street job. I'm about to be out of work with less than a year out of school. So that was option number 1. Or option number 2 was I could figure out a way to get out of it. And so the company had a lot of data. And I found this cluster of deals where like the estimated actual profit numbers, before doing a deal, we'd estimate how much we'd make on it. And then after the deal was done, we would look at the actuals. And I looked at that and I saw this cluster of deals. I'm like, hey, Brad, what is this cluster of deals? He's like, just ignore it. Those are the assignments. Assignments? What's that? Please explain that to me. And he explained wholesaling to me, and my mind was blown. I'm like, first of all, there's no way that's legal. He's like, no, we've been doing it for like 10 years. It's perfectly legal. I'm like, wait, so I'm a finance guy. I'm like, you're creating options contracts on houses.
Mm-hmm.
You are essentially trading options just like we trade options in finance. He's like, yeah, I didn't really think about it that way. But why don't you just do this business? That is way sexier. There's no like constraints of the physical world. He said, well, Robert, we can't do that. I'm like, why? So, well, we have $400,000 a month in overhead. And when we flip a house, we can make $100,000 on a house. And when we assign a deal, we only make 30. I'm like, yeah, but the time it takes you to flip one house, I can wholesale 6.
Right.
So January, we cut the company way back. We pivoted 100% to wholesaling, took that company to $1 million a month within about 6 months. And then after 3 years, went out, started doing it on my own. Took 2 more companies past $2 million a month. Last time we did it with 7 guys in under 8 months, and then held it above $2 million a month. And then I moved out to California. And in DC market, I knew who all the buyers were. I had them all on my cell phone. You always know who that buyer is for a deal. When I moved out to California, I didn't know who the buyers were. So I had to find a way to find buyers for my deals, because you guys probably know this feeling where you get a property under contract, like before the days of investor, and you're popping champagne bottles, and the next morning you wake up, you're like, shit, I really need to find a buyer. Who am I going to sell this to?
Yeah.
And so that was the feeling every time I had a deal. So I built Investor Lift to help find buyers for my deals. And then it got really expensive. So I brought in about a dozen of my buddies to start offsetting some of the dev costs. I said, hey, you chip in 10K a month, whatever I build for my company, I'll give you. And we ran that for a few years, and we became some of the most successful wholesalers in history. And then those guys, of course, became coaches. And they're like, hey, Robert, you got to open this up. So I was like, okay, I'll do a webinar. I'll do a pre-sale. And I don't think anyone's going to buy it. But if a few people buy it, then I'll turn it into a SaaS product. So I did a webinar with Dan Schwartz about 3 years ago.
I was on it. I was on that.
You were on that webinar?
Yep.
Wow, that's the OG webinar.
Yep.
Longest webinar. I think it went for like 3 hours, but we had like 90% audience retention.
It was sick.
Like 3 hours. You know how much we sold on that webinar, Dean?
You've said it before. I can't remember the exact number, but I know it was a lot.
We did 144,000 live, and then I was like, oh shit, people like this. So then I took the replay and I posted on some Facebook groups. And the first 30 days, we did 1.8 million sales. And that's when I realized I had to, as much as I loved wholesaling, I had to quit wholesaling just to work on this. And investor, where I always wanted to get it is to build up the data sets to eventually be able to plug in AI, because I could see how fast AI was advancing. Like if we can just mine all the data, eventually we'll be able to throw this into neural networks and we'll be able to train AI models, and that will be the future. So we've been doing that for the last 5 years, and we just rolled out our first deep learning models end of December. And in December, we had like about $500 million of offers come through the system. Last month, we were $31,000 shy of $1 billion. And this month, we're going to do 1.8 billion.
That's so dope. I love it.
That's crazy.
So it worked out. It worked out.
So, dude, when you first got started in real estate, did you think it was the opportunity that you saw all your, college buddies that they had in finance and consulting and all those other? Did you see real estate like, man, this is a huge opportunity, or did you just kind of get lucky and stumble upon it, kind of like I did? Right? I did a Google search, I happened to find it, I got started. What made you pick finance or pick real estate, and did you feel like there was a big opportunity there?
Yeah, so when I was in college, I was like really broke, but I had like some friends that like graduated, and some of them were like flipping some houses. So like I was helping them just to like get some cash here and there. And when I say helping them, I mean like digging ditches to put in plumbing lines, doing drywall, painting roofs, like just like grunt work. But you get a 12-pack of beers on the weekends, you crush some beers, do a little bit of drywalling. So like I had some exposure to some friends that were just flipping houses. And then I was watching like some of these shows like Flip or Flop on HGTV. I'm like, man, these guys are making like 100, 150K a deal per deal. If I can just figure out how to do that and just do like 1 or 2 a year, I'll make just as much money as if I work in finance. But I didn't know what I was doing. That's why there's 2 options. You can pay someone to teach you, or you can go work for someone for a few years. I didn't have any money. I saw it as something that was very interesting, because what is the wallet share that people spend on real estate? It's the biggest wallet share of anything, right? So of all the different things you could get into, I'm like, this is what people actually spend the most money on every month, is their rent or their mortgage. That's where the most dollars go in. And then if you look at like some of the stats from the IRS, it's like, where do 99% of all millionaires, where do they make their money? They made their money in real estate.
Right.
So if you just look at all these different factors, it's like, okay, there's so much money going into this industry, but it's so inefficient. And when something is super inefficient, but there's tons of money being spent on it, that's an opportunity to exploit.
Robert, I thought it was interesting when you were talking about the Goldman interview, how the person that was interviewing you said, hey, you're an entrepreneur, right? Like, I'm going to offer you this job, but don't take it. Were you self-aware at that point, at that stage? And did you know that you had that entrepreneurial drive in you, or is that something that came at a later stage? Or how did that actually work out for you?
Yeah, good question. I mean, I always had like hustles. Like from the 5th grade, I was like training chocolate bars and selling coffee door to door on subscription models, and doing, pet sitting. And then when I got into college, I started doing like a little bit bigger scale, where I'd like buy a website that had a little bit of traffic, was selling something online, scale up the traffic. sell it for 5-10 grand, whatever. I think my biggest exit was like 70,000 on a site. So it was all like side hustles. So I'd been doing a lot of entrepreneurial stuff, but I never looked at any of it as like legit business.
Yeah.
It was always like a little bit shady, like selling fake clothes or like fake designer bags or like, like some of the websites I used to flip weren't in like the most
Above water.
above water industries. But like it was kind of like, oh, this is just what you do to like make money, so I wasn't, none of them were really like businesses. But I think he recognized that I had like the ability to like just figure shit out. I think that's a big thing that entrepreneurs need. Just like, how good are you at figuring shit out and solving problems? And funny story about him. 18 months ago, we get offers on our company pretty often. We just had $100 billion company try to acquire us in December. But the last real offer before that one was for 150 million. And I turned it down because I know we have the potential to become a $10 billion company with where we're headed. And we're actually, our roadmap to get there, we're actually a little bit ahead of where I thought we'd be just 3 years in. So we turned it down. But the first guy I called was that guy right after.
Did you really?
I didn't think he would even remember me, even before calling my parents. I'm like, I'm calling this guy. I'm like, hey, remember you did an interview with me like 7 years ago? I just want to let you know I took your advice. I'm 7 years in. I just got my first like legit offer. And now he's my banker. Now he's my advisor.
Oh, that's dope.
Yeah, it all came full circle.
Rob,
Yeah.
bro, have you always been, we joke about the master of self-confidence, but I love your self-confidence. Have you always been this self-confidence, or has it like gained momentum with these wins that you've had over time?
Definitely gained momentum. Like I was like the awkward nerd in high school, but for people, I meet a lot of guys that don't have a ton of confidence, and they're like, "Oh, Robert, how do you have confidence?" I'm like, how you get confidence? You go to war every day and you win battles.
Yeah.
Yep.
You can't fake confidence, right? You have to just go to war every day, win battles, take home some scalps. And if you just do that over and over and over and over again, you start gaining confidence in your abilities. We ran into some major issues end of last year. And my wife was getting all concerned about it. She's like, Robert, you think you're going to be okay? I'm like, oh yeah, no, 100%. Like, she's like, well, how are you going to figure it out? And I'm like, I don't know yet, but I'm going to figure it out. Like, no matter what has been thrown at our team over the last few years, we always figure it out because we have the best people in the world working with us. And yeah, you just got to win a lot of battles, and you'll get the confidence.
So with the roadmap, what do you think is your biggest opportunity legitimately in the next 5-year span? If you're adding AI, do you think it's like, okay, I have so much distribution, I can do a ton of lending because no one can essentially access our customers? Like, what are you thinking about that way?
Yeah, great question. Yeah, we have lending going right now. We're doing about $250 million of lending loans through the system every month, just on a pilot where we're just like experimenting with it. Where we're going with Investor Lift is it's going to be the operating system for all real estate deals. So if you're doing real estate deals, they're going to happen through Investor Lift, and you're going to want them to happen through Investor. If you're not going to want to do anything off platform, because Investor Lift will augment you with AI. No one else is building AI for real estate investors because they're like, oh, this is such a small little market segment and it's super fragmented. Like there's no publicly traded companies in the wholesale space, everyone else is going after the realtor market, right? Because they see the realtor market as a massive market. That's 80% of transactions. I'm like, hey, Zillow, Redfin, all you guys, you can go fight in that market, right? It's a red water market full of massive sharks. There's this beautiful little blue water market that everyone is just ignoring and no one's paying attention to. They're just like, oh, these are just the scammy little wholesalers. So we have built a deep learning model now. We're the only ones that have the data to do it. We're the only ones that will ever do it. Because if you were to do it, you have had to start mining the data 5 years ago.
Yeah.
Can I share a screen on here?
Of course, bro.
Actually,
You
I'll just tell you. I can just tell you the numbers. So we launched the deep learning model end of December. In January, it was increasing the average assignment fees by about $2,000. Okay, but it was doing a lot more than that. It used to take us 14,000 emails to generate one offer through the system. 14,000. Now, keep in mind, 90% of offers don't happen through the system; they happen over the phone. But now with the AI model, we got that down to from 14,000 down to less than 180.
That's
It's
bananas.
insane.
That's
Wow.
bananas.
Yeah, we've gone from 500 million in offers in 3 months to 1.8 billion. It is
way
working.
less more effort, right?
Way less effort. You don't have to think about your campaigns anymore. You just click a button, the AI does all the work. Now, it gets smarter every night. Okay, so January was increasing assignment fees by about 2,000. We looked at the the February numbers. Already in the first 30 days, it's now increasing assignment fees by $6,000 on average. And that's just 60 days in. Now, and that's just training on our data. I just finished some work here right before this call where now we're bringing in all the tax record data. So we're going to start training on all of that as well. So every single transaction that happens anywhere in America is going to start feeding up into that deep learning model. And we're going to start bringing in the market trend data. We're going to start bringing in the Census Bureau data. We're going to start bringing in all sorts of data into this deep learning model. And once we get there, we're going to have an all-seeing, all-knowing AI. We actually already have a prototype over here that we built actually in one day, where you can natural language interface with the AI just like ChatGPT. You'd be like, hey, what's the average assignment fee in Austin, Texas? How long on average does it take to assign a deal in Austin, Texas?
Wow.
We're the top 5 markets. So
You
we
plan
already
on
have some of
taking
these
that
prototypes.
customer facing?
It'll go customer facing sometime this year. So imagine if every real estate investor has an all-seeing, all-knowing AI in their back pocket. Now what we need to do, the next stage, is we're going to build profiles for every investor. Okay, we're already building these. We've already built them. We just got to layer on the user interface. We just brought in one of my former chief design officer from my last company. Do you guys know who Elon Musk is?
Yeah.
Yes.
He just finished designing Grok for Elon Musk. One of his projects before that, I'm sure you guys use Spotify.
Yep.
He designed Spotify. So we're building a new version of investor called V11. And on V11, every single investor in America is going to have a profile. All their flips, all their buy and holds, all their assignments. And it doesn't matter if you're on InvestSwift or not InvestSwift. You're going to have a profile. You'll be able to look up any investor in America, see their profile. Then what's going to happen is the AI, when there's a good match between a deal and a buyer, it's going to do those matchings. Okay. But then you as an investor, as you acquire assets, those are going to go into your portfolio. And the AI is going to start looking at your portfolio and start making suggestions. Hey, this one you have as a long-term rental, maybe you should convert it into an Airbnb. The rents in this area and the occupancy are off the charts high. Hey, this one, you've held it now for over a year. You can now go from short-term capital gains down to long-term capital gains. And there's been a lot of appreciation in this market. You might want to exit that one and list it for sale. So it's going to be that all-seeing, all-knowing AI that will just guide investment activity across the entire country, which will bring efficiency to the marketplace. So that's stage one, is like, we just have to have the operating system with all deals, and then AI making efficient decisions on everything, on all those deals. Then the next layer, and also establish trust, because the big problem in our industry is trust.
That was the
reputation,
thing I was going to bring up. Like, I feel like
things
the
like
biggest
that.
thing is trust and reputation. I have written down because I remember commenting. I was like, Rob, this is the best thing you've ever implemented, is having the reputation in Investor Lift, because that was,
Yeah.
I mean, as an entrepreneur, you always encounter problems, but everybody bitched about that. You're like, all right, bro,
hmm
we got it. Here's reviews for all the buyers. If
Right.
someone
Yeah.
dogs you, here you go. The world can see, and then that way nobody has to deal with them anymore.
I
Yeah,
love
all
that.
those reviews will be public. You can look anyone up, see if they're a complete douchebag or if they're actually a legit operator. But then
That's huge.
where we'll go with it eventually is we'll provide the capital as well. So the capital, we're already running pilots right now. We're doing millions of dollars of loans already. So we'll plug the capital in. So if you are a good operator, you have a good reputation, you have a good track record, you'll have the capital available. You'll have unlimited cheap capital. It'll be cheaper than ever before. Why? Because the capital markets will compete against each other to give you the best deals. And once we get that all together, it's going to be the operating system that everything transacts through. You won't want to do any deals outside of InvestorLift.
And then I guess there's not a whole lot of underwriting on the capital side either, because you already have all the data. You
Have
can
all the
see
data
it.
on it.
Yeah,
Yeah.
there's not a whole lot of underwriting risk. You're like, all right, nope, makes sense. This is what you're approved for. Let's make it happen. I love that.
So
Yeah.
I got a ton of questions I'm writing down here. So I'm going to come back to some questions later about what some of the data is you're seeing and what's working for investors, what's not. But staying on the topic that we're on, wanting to make this the one tool that people have to use. Do you plan on expanding outside of basically being the go-to dispo tool to sell these wholesale deals to other investors? Do you plan on taking it and going vertical with other features to make it a CRM, to make it front end for marketing and doing all those different type of things? Do you plan on growing in those other features?
Yeah. I mean, we toyed around with like CRM, but like Salesforce has invested billions into CRM. So like I can't compete against guys like that. What we will introduce is on the new version, there's going to be things like task management. There's going to be Kanban boards where you can keep track of the state of leads. There will be some base organizational functionality. Okay. It's not going to be a full-blown CRR, but if you're a beginner and you don't want to have 10 different systems all connected together with a bunch of Zapier integrations, all that, yeah, you'll be able to run your entire shop if you want on InvestorLift. And then if you're a really big shop and you want to do all this fancy stuff on Salesforce and custom flows and all this shit, then API connection to your CRM and just pull data back and forth. Where I actually see our bigger opportunity, I always believe in trying to do one thing and one thing only. Right now, we're just, the biggest problem we got to solve is wholesalers want good buyers. Buyers want good deals. So that's the focus right now, just those two things. That is everything. We're going to strip away massive amounts of complexity just to focus on that one thing, is like letting the wholesalers know who the good buyers are and letting the buyers know what the good deals are. Like we actually just rolled out last month a deal score in AI, where now every time you post a deal on InvestorLift, within about 24 hours or so, you're going to get a deal score showing you how good your deal is performing. So we're going to focus on that on single family. What's interesting is the AI, we haven't specifically given it instructions to figure out different asset classes. But the one asset class that is not single family that we do get a lot of postings on is, of course, land. So I got a call from a guy down in Florida. He's like, hey, I just tried the AI for the first time on a land deal. And the first AI buyer that came in bought the deal. Normally I'd have to put it on the MLS and it would take me 6 months to sell. I'm like, that's interesting, but maybe it's a fluke. I'm like, call me back if it happens again. Literally the next week, he calls me. He's like, Robert, I just did it again. I posted a land deal, but this time it wasn't the first call. It was the second call that I sold it on. Once again, he's like, I would have had to put this on the MLS and wait 6 months to sell it. So I'm like, that's interesting. So because there's been a decent amount of land deals going through InvestorLift, it's starting to figure out land. It's starting to figure out land buyers. We're not even coding it. It's a black box. Like it's just figuring this shit out on its own. It's becoming more intelligent. Now, what we'll eventually do is we'll branch. Land will probably be the next asset class that we start branching into. But I just got a text from Trent Ellingford. He's been piloting it on commercial multifamily. He just texted me and he said just filed $450,000 AOC with a title to gay and buyer dropped EMD. So he just made a $450,000 assignment fee
Wowzer.
on I can't remember if it was a commercial or multifamily deal. Okay. So starting to figure out commercial multifamily. So what we'll do is we'll dominate the single family and then we'll start branching out into these other asset classes. And then the final stage will be going into Canada, the United Kingdom, and Australia. And just global expansion.
What I love about that answer, real quick, Strat, is the focus. What I've heard over and over, the resounding theme of the most successful people in the world is just that level of focus, right? There's an opportunity, a small little grab you could have, market share grab, by going and becoming a CRM and, you know, becoming a service-based business for marketing and doing all these other things you know how to do and you've spent time on, but by becoming the best, undeniably best at what you're focused on right now, I think is your quickest way to go, you know, to the next level. And I love the vision of going into commercial too. We talked about that a week or two ago. I think that's another space. You know, there's some other big names that are in that space, but not in the same way. Just like there's the Redfins and the Zillows, right? There's the LoopNets and the Crexies and different other systems, but no one's doing the off market like this.
Yeah.
And Craig's
and those guys,
and they grew like crazy.
Yeah, those guys are like, you know, multi-billion-dollar publicly traded companies. So when they want to pivot, it's like turning an aircraft carrier. Versus
Right.
we're on a little jet ski.
You're nimble and agile.
360 that thing. So I think once we start looking at those asset class, we can jack them up pretty quick just by moving way quicker and piggybacking off of what they've already done.
What's the bottleneck for scale in those asset classes, Robert? Is it access to data for land or commercial? Is it like the users? And, you know, obviously lots of people on Investor Lift are in that single family space. Like what needs to happen that creates the tipping point when we could get an Investor Lift for commercial or land or something like that?
Yeah, that's a great question. So we have all the property data already. The bottleneck is always user acquisition, right? So you know, now you go on Investor Lift, there's 5.8 million buyers, there's hundreds of thousands of properties pumping through it. It didn't used to be like that.
Yeah.
Right. We had to, when you're scaling a two-sided network, you have to scale up both sides. You got to get a little bit more buyers, a little bit more deals, a little bit buyers, and a little bit more deals. And that's why, you know, when we started this, people were always like, oh, Robert, you had such a great idea. I can't believe no one ever thought of it before. When I launched, there was 200 Investor Lifts. They just all sucked.
Yeah.
And we took them out one by one by one by one. There was one company that raised $196 million and during COVID basically cloned our entire deal site, launched a new variation of it, and spent $196 million trying to rip us off. And they weren't able to get anywhere close. I think they peaked at like 4,800 buyers. So the real tough part is keeping the two-sided marketplace economics working. So when we first launched, we didn't launch the entire country. We go but city by city, right? I remember launching Atlanta. When I launched Atlanta, I went and I did weeks of research to figure out who the top 5 guys were in Atlanta. And then I did sales calls and I got all 5 of the top 6 guys, or all the top 5 guys in Atlanta in that city, all starting to market their deals to Investor Lift. Then what happens when we pick up the top guys? Then you start getting the second tier guys and the third tier guys, and eventually you own that city. And then it'll just start spreading via word of mouth, but you got to seed it first. And then once you seed it, you have to make sure that you have the supply demand economics in place. So one of the things that we monitor really closely is number of inquiries and offers per property posted. And how long does it take? And we monitor that by city. And sometimes we're like, hey, this city is getting a little weak.
Yeah.
Okay, what do we need to do? And usually what we do is we actually go and look at who are the lowest performers on the wholesale side, the guys that are pushing out junk deals, and we prune them out, actually decreasing the supply. And then what happens is the top buyers start coming back more and the demand starts surging back up.
Because that's your biggest
so
problem, is that you'll have
Yeah,
too many
the biggest
emails
problem is
going out, and then people don't open it up because there's no scarcity there. And so essentially,
yeah,
do you even tell those wholesalers like, "Hey, bro, your deals suck. We gotta nip you in the bud"? Like
yeah,
you've been
yeah. We just
smart.
call them up and we say, "Sorry, we're canceling your account." So we cancel like dozens of accounts every month, which people are like, "That's insane. That's the biggest thing we spend money on." An investor, people are like, "What do you spend the most money on?" Canceling accounts.
Is keeping the demand high.
Yeah,
That's a really good explanation. I never would have thought about it like that, growing it both sided, right? Like the buyers and the deals, keeping those things because you need both in order for it to be good. Do you think that there would be unique challenges getting commercial buyers to come onto the platform? Just, I don't know, they may be more sophisticated. They're used to working with the broker, right? Like there's a lot of people, low barrier to entry, single family fix and flip wholesale. It's a different type of avatar, right? For commercial.
yeah. That version will be so much different. Like there's gonna be data rooms, and like you're gonna have to provision access to the data rooms. Like it's gonna be way more locked down. But we have a really good ninja strategy on how we can get all the users for $0, creating a virality loop that I can't explain here because everyone will copy me.
Yeah.
I got to build it first, but we have a way that we can get all those guys for zero marketing. We still have to do some work up front, but one of the main things in platforms is creating what we call virality loops. So we've spent basically no money on marketing, like on paid ads. I think we spent total like $100,000. We tried it last year and then we're like, oh, it's kind of a waste of money. But pretty much we acquired all our users at zero.
Yeah.
The way that we do that is by getting viral loops going, where every user that comes on the platform, brings on additional users, brings on additional buyers, or brings on additional wholesalers. And then we monitor those closely, and then that's how we're able to get to almost 6 million users without spending any money.
Does that come from people being incentivized to go like onboard someone almost like an affiliate, or is it from you going to maybe different coaching programs and creating a special offer to get users onboarded, or is it just like fundamentally from the experience that they just go start telling everybody else about it? I mean, what do you think has worked best for you guys?
It's a little bit of everything. I will say on the wholesaler side, probably the affiliate was our number one. Instead of paying Google, I'd rather just pay our customers when they talk to their friends about it.
Yeah.
So like probably at least half of our user base came in through some affiliate. And we made the affiliate offerings like really generous intentionally. But we have some new stuff that's going to be coming out this year that I think is going to be even more powerful. But those are ones I'll have to save for a future podcast. I know everyone's going to copy me as soon as I launch it. They're all going to copy me.
So go ahead, Strat.
Are you running buyer ads all the time? Because everybody always says like the best buyers list is the MLS, right? And I think that's just for the fact where you have, let's say, people who don't know what they're doing and just retail buyers.
Yeah.
Right. And so
it's
like
different buyer persona.
And so you don't even care about that buyer persona though. You're like, hey, we want the semi-experienced people who know what they're doing. That's what we care about. Everyone else can figure out the other stuff.
Well, we want all of it. So we know about every real estate deal that has ever happened. And now we're building profiles for all those guys. So it doesn't matter if they bought off the MLS or they didn't buy off the MLS. It's very easy to find them and see what kind of buyer avatar that person is. The only thing is like the MLS has just been basically a cartel.
Yeah.
That sits on top of real estate transactions that tries to extract rent, tries to extract 3% fee for having access. But as soon as they transact, as soon as that buyer closes on that deal, it hits the tax records. And now this is America, baby. In America, real estate data is public. So we're going to see it. So we have all MLS buyers.
Have you thought about buying like a flat fee company and letting people do novations or something like that? Or is that not a big enough market set for it even to matter?
I don't want to compete with the MLS because like their whole thing, their core value proposition is bringing you the retail buyer. I don't want to bring you a retail buyer. I want to bring you someone that can buy with cash. So I'm going to let them do their thing and focus on their thing. And then I'm going to focus on our thing, which is going to be the actual like real estate investor that's
Investor
closing cash,
transaction.
that's going to flip it or put it into a rental, or like the guys that do this for a living. And if you want to sell it to a retail buyer, then sell it on the MLS. I don't want to replace the MLS. I want to create something new that doesn't exist.
So you talked about public companies and what public companies have done. Do you want to make this public, or do you want to have an exit to a big company that's going to gobble this up and you sail off into the sunset? What do you want to do? Do you want to stay in this forever and take it public, or do you want to have an exit?
Yeah, that's a really good question. So initially what my thought is I'll build it up and then like sell it, right? Because IPOing was too expensive. Like, if you wanted to take a company public, there's so much red tape and regulation that you had to go through, and it would take 2 years. It would cost millions of dollars in attorney fees. And then even after your IPO, just all the compliance you had to keep up with, just miserable, absolutely miserable. But I think that's about to change, right? Because Citadel and a couple of banks got together. I think it was BlackRock got together, and they announced that they're going to launch the Texas Stock Exchange. Because Texas is very low regulation. They said, hey, instead of it costing millions of dollars and taking years, we're going to make it so you can IPO for a few $100,000 and do it in under a year, which makes that option very attractive. And then as soon as they announced that, they're competing against NASDAQ and New York Stock Exchange. And NASDAQ and New York Stock Exchange just realized, oh shit, we're not going to get any IPOs. So both of those exchanges just reincorporated in Texas. So now, as of I think later this year or next year, all stock exchanges will be under Texas jurisdiction. And now there's actual competition for making it simple and easy to take companies public. Now, if you look at post-exit valuations of companies that are sold privately versus sold publicly, if you take a company public, the valuations, the stock price you can get from public markets is about double what you can get in a private sale. So it's TBD, but if that plays out, there's no way I would sell privately if I could just IPO it and make twice as much money.
I think being a public CEO is way harder than people make it out to be. Would you want to have to deal with the markets, and would you want to have to deal with, like, I think about what Bill Ackman's gone through from time to time, like dealing with that type of stuff. And like you do have a board now, and you have all that stuff where you're like, hey, I just maintain majority shares. I am Zuckerberg. You can go suck a dick if you want to do anything.
I would fucking love it. You know why? Because inevitably there's going to be people that short your stock. But if you're the CEO of the company, you can just go to war every day and you can squeeze the hell out of those shorts. And you just, as you push the stock price, you're just basically getting revenge on all the like doubters and haters. And like, look at Elon Musk. Look at all the guys that shorted Elon Musk.
Oh yeah.
And he's just like, have fun, shorts. We're about to squeeze the hell out of you. Get ready for your margin calls. And everyone that's betted against Elon and has shorted his stock has lost billions of dollars. So I kind of like it. I kind of like it because I'm like, if we do really well and we're not idiots, like you can just bet on yourself and squeeze out all the shorts and just run a great company.
It's funny that you're talking about that, Strat. We were talking about how to make a few $1 billion, that Brad Jacobs book. And then in there, he talks about where he got shorted and he did the biggest stock buyback in the history of stock buybacks. And it made him like $6 billion or something like that, when all of his bankers, all of advisors said, no, this is too much. Don't do that. And it just felt like a massive fuck you to everybody that shorted this stock and be like, great, we'll short it. I'll buy back all the shares and then we'll run the number back up again and I'll make a few more $1 billion, dude. That's cool.
Yeah. Yeah. You got a lot more tools and options when you're a publicly traded company.
Yeah. You said something interesting that I feel like there's more to it than just the statement. So you talked about the doubters and the haters. Have you had a lot of doubters and haters along your journey that fuels you and just gets you waking up early in the morning, just wanting to go to battle, go to war, like you said? Have you had a lot of that?
I mean, anytime you're running like a big two-sided marketplace, you're just shit rolls uphill. So, a lot of times like Tuesdays and Thursdays I have blocked off and I'm like, oh, I have a nice quiet day. There's not going to be any calls. and shit will just roll uphill all day long. You never know what some dumb idiot is going to do on the network that day. And every time you solve one, there's going to be some idiot that invents some new way of doing some dumb shit on the platform that we've never seen before, that we have to figure out how to solve and address. So, and from day one, everyone was always like, "Hey, Robert, you're going to die. You're going to this is not going to work." I remember when that one company raised over $190 million. Like everyone was calling me, telling me, "You need to fire sell this. So you should go call that CEO right now and sell me your company." And I'm like, "Yeah, no, I'm just going to beat them in the market." We had guys this summer go in and steal shit tons of our data. Like they broke multiple state and federal laws, some with jail time, extracting data from our systems and then tried fire selling it, building knockoff products. People have been doing shit like that for years. But at the end of the day, they usually last 6 months, maybe a year, and then they die out. And we're still around. We're still kicking. We're still growing. If I show you some of the growth curves, they're just insane. We're growing. InvestorLift now is at the strongest point it has ever been in history. The volume, we basically 4x'd the company just in the last 90 days. That's the power of what we're doing with AI. So I'm super optimistic because these growth rates, if you extrapolate them out a couple of years, like we're 5 years in, and they're going like this, and now they're going like this. So I'm super excited because all the people that thought we're going to die a million times before, we still haven't died. But not only that, we're stronger, and the platform is working better than it ever before. And once we roll out our V11 product, that's all AI based. It's game over.
Robert, you had posted something in the Collective Genius Facebook group, just sharing market data, your interpretation of all of that data, the trajectory of the market. I know we've got a lot of people in here that, obviously the market has been wonky the last couple of years, right? What are you guys seeing? What's market activity looking like for you? Share some of the insight that you guys have since you have access to so much of that.
Yeah, great question. What's cool is we can usually see the market moving about 6 months before the retail markets move. And the reason being is that real estate investors, they're constantly watching the news, watching interest rates, talking to their bankers, talking to their title companies. They're way more plugged in than a retail buyer. So I remember before the hedge funds started backing out, 6 months before, I was doing calls to CEOs. I'm like, dude, if you got flips, get out of your flips. You're going to get stuck holding the bag. There's some guys that took my advice on that, and they got out of those positions, ended up saving themselves millions of dollars of losses. Some guys didn't listen to my advice, and they got caught holding the bag and had millions of dollars of losses on properties that they still had on the books. So what's interesting, I didn't post this on CG, but what's really interesting is looking at how the election news impacted markets last year.
Yeah.
So when Joe Biden went out and basically flopped on stage, the lead volume, because we also have motivated seller leads coming in from, we don't really talk about too much, but there's a motivated seller site we give to all of our customers. We have tens of thousands of leads coming in every year from motivated seller sites, and we can look at the volume of motivated seller leads coming in. So as soon as he shit the bed on stage in front of the entire world, leads increased.
Lead influx went like that.
Yeah. Fucking over, bro. It's over.
Moving to Canada.
And then Kamala Harris, she got announced, and she came out and she announced the $25,000. We're going to give you $25,000 for a down payment. Just decimated the market. We were seeing our buyer lead volume, it got knocked down. I think it was 50 to 60% less offers and inquiries after that announcement. It just got decimated. And then after Trump won, he's a much more free market, low regulation, low interest rate type administration than what the alternative was. The very next month, things just bounced right back up. I think it was 30% boost in buyer activity and offers and inquiries, literally just in November. And it starts surging even further after that. So now it's at the highest point it's ever been in history. It's just things like time on site, like the amount of time that a buyer spent on the site last year versus this year. It's increased from around 4 minutes up to 5 minutes this year. So buyers are shopping a lot more. There is some confounding factors because it's not a fixed system where there's no changes. We're also impacting the system by rolling out AI and things like that. But we are seeing in the market is we're seeing more buyer activity than ever before. And the motivated seller lead volume is kind of bouncing up and down. There's not really a clear trend there. It's up, then it's down, then it's up, then it's down. So it's like the homeowners are still figuring things up, but the buyers are pretty bullish. The buyers are coming in, they're buying a lot of inventory.
Love it.
Rob, with all that data, have you thought about like doing a straight up enterprise product and selling to these massive companies for gobbles of money for almost like a Bloomberg or whatever?
Yeah. We have a product that we just built where you can natural language interface with our database.
And that's
so it's
gonna
not
be like
public right now,
that you're gonna.
but that will come out where like literally it's gonna be Chat GPT basically for real estate data.
I love that. And
Yeah.
bro, what are you taking in to learn more every day, like podcasts or books?
So I'm in the tech space. So my favorite like tech podcast is the All In podcast. I don't know if you guys ever listen to the All In podcast.
We've talked about it. Yep.
All
Many
fans.
times.
Yeah.
All fans.
Yeah. And I just reread a book, one of my favorite books, Naval Ravikant, his book. I can't remember what the name of it is, but I like to read books from other billionaires. I try not to read books from millionaires. There's enough books from billionaires that if you read all of them, like, because the whole thing is like, I just told my wife when we were dating, I'm like, I'm a billionaire. I just don't have my money yet.
Yeah. Well, you did say
Right?
other billionaires, not like from billionaires. You said other billionaires. I caught that.
So if you want to become a billionaire, all you got to do is so think about this hypothetically. You take someone off the streets, a homeless person, you give them $1 billion, and you check back on 5 years. Where's the money?
Gone.
It's gone, right? You take a billionaire and you reset them down to zero. And you check back 5 years later. Where are they at?
Back at $1 billion, if not more, probably double.
Probably double.
They're
they got a little bit more kick in their step because there's
exactly. They got zeroed out and they got some fire, and that fire really motivated them to just go to a whole nother level. And they don't just have the $1 billion back; they probably have a couple more billion. So the reason being is why that is because there's just different operating systems that people run on. So if you want to go become a billionaire, all you got to do is start understanding how they think about things, right? Like, how is their mindset different? How are they operating differently than an average person? And just start adopting that is your operating model. I did a few reels recently. Like, I think probably like the last few reels I did on IG on some of these principles that I applied that I found like the most useful, like value of time, opportunity cost, focus, things like that. And it's hilarious because half of the comments, no, probably 30% of the comments are from like entrepreneurs who are like, yeah, this is like really good advice. Oh yeah, blah, blah, blah. And then 70% are from the losers who are like, this is the dumbest advice I've ever heard. And you know what their Instagram profile is going to look like before you even click on it. You're like, this guy's going to be a complete loser. You click on it. Yeah, complete loser. Like, it just goes over their head. They just like can't comprehend like the level of some of these operating systems. So I listen to probably about 2-3 hours of podcasts a day or audiobooks. Just do it in the morning. I do it before I go to bed. And of course, you got to throw in a little Joe Rogan in there just for some entertainment value. And yeah.
Do you listen to Founders?
Sorry?
Do you listen to Founders podcast?
I don't. It sounds familiar.
You would love it.
I don't know if that
Founders.
I got
you
Jason
gotta
on
put
it,
him
bro.
on it.
I'll put you on it. It is the best podcast for entrepreneurs I've ever heard in my life. Like, he does like Bezos' shareholder letters. My favorite one's the dude who the fish who ate the whale. A dude essentially overthrew the Venezuelan government to expand the banana business to the largest.
It's the Cliff Notes, and it's not even Cliff Notes. It's like an expanded audio version of what you're talking about, reading the biography of a billionaire, and then the host gives all these insights. It's really good. You'd like it, especially if you like reading that. Founders for sure is a great recommendation.
I love that.
Yeah.
Love that.
I had a question about, no, you're fine. You talked about, oh no, I was curious about how much split testing you do, right? You just talked about your AI model that you have right now, bringing in the Census Bureau data, the public records data, all that different stuff. How much split testing do you do? Because you may find that you bring in this data that you don't have control over, like you have all the data of Investor Lift and it's very niched and singularly focused on its purpose.
Yeah.
But you bring in this other data. So how do you make sure that like this new data I'm bringing in is filtered the right way and it's not going to throw everything off and skew it the wrong way? How much of that split testing do you do?
Great question. So everything is always tested. Okay. And the way that we do it, especially with the AI models, is we write the tests before we build the model. So what we do is we try to find some examples of ground truth. So for example, let's say one of the models we recently built was like to identify what is a daisy chainer and who's actually a real buyer. Like what does the fingerprint of a real buyer look like versus a daisy chainer? So what we do is we create two data sets, one of like known daisy chainers are just egregious. Okay, here's the user IDs of 1,000 daisy chainers. And then what we do is we load up another test data set of like, here's like 1,000 really great buyers. We know 100% are really great buyers. Then what we do is, so we write those tests before we even build the model. Then we build the model and then we test the model against the test cases, our ground truth, and see how it performs. What's the false positive rate? And then every time we make an adjustment to the model, it's going to run against those tests. But then even if we pass all the tests, when we roll it out to production, we're not going to roll it out to production for all accounts. What we typically do is there's like certain users that are like, hey, I'm okay to be a guinea pig on the new stuff.
Yeah.
We'll roll it out to some test accounts or to a percentage of all accounts. And then before we even start the work, what we'll do is we'll identify what does success look like. We think that if we do this change, it will improve volume of offers, it'll improve volume of inquiries, it'll decrease spam reports, it'll whatever it is. We identify what success looks like, what are we trying to attack here, and how much do we think we can move that lever. We build the tests, build a model, roll it out to a portion of traffic, and then see how much did it actually impact these factors that we're trying to impact. Sometimes we completely fail. Sometimes we go in the wrong direction. And then we just roll it back and then we go back to the drawing board and we try a new approach. A good example of this would be deal scoring. It took us 2 years to figure out deal scoring. And then in December, I came up with a new idea on deal scoring. It was completely different than anything we'd ever tried. 48 hours later, we had a model that actually worked. And then we knew factually that it actually worked. And the time it took between ideation and rolling that into production was 48 hours. The whole thing happened in 48 hours.
Wow.
I believe it. We talked earlier about going vertical, both from like a feature and function standpoint and deciding, hey, let's be singularly focused there. But you talked about doing lending. And that's a huge opportunity, right? You're pumping all these transactions. Why not bring lending and capital to the source of these deals? I think that's brilliant. What about escrow? Are you looking to bring escrow to the transactions as well? Transaction management? What additional kind of services are you looking to bring to the transactions?
Yeah, that's a great question. So what we like to do is on a lot of these ideas for stuff that's a little bit outside of our core competency, we like to run small tests, very, very small tests that required like not more than like a day of one engineer's time, and just roll something out to the marketplace, see what the demand is on the marketplace for it. And if there's enough demand, then we start throwing more engineering resources on it. So we ran a few different tests this last year on like different things that we thought might add some value for users. For example, integrating title. Now we're not going to build a title company, but what we can do is have a button where when you click that button, it automatically opens the file and sends everything over to a transaction coordination company that just is going to be basically an affiliate partner. Just like see if there's demand for it. It's like we rolled that out into the product. No one clicked the button. So we're like, okay, not a big demand for it. People have their title companies. They like sticking with their title companies. providing easy connection of data is not a big value add there for the users. So like we're not really throwing a lot of effort on that. On lending, we just added a button, apply for loan. And on the back end, then that fires over to a lending partner. You know him, Tim Heritage, who then receives that lead and qualifies it, sees if he can close a loan. I'm not building a lending company, but I will provide lead gen for that lending company, giving people the opportunity to get capital for deals. Again, like 1 day of effort for engineers. We plugged in there. That one actually took off. That one started pumping off $250 million of applications every month. And we're like, oh, cool. There's something there. But again, I'm all about focus. I'm not going to build a lending company, but I will build the infrastructure to plug any real estate investor into the best lenders, give them reputation systems, give users the ability to go 5-star or 1-star review them, give them the ability to get multiple different applications from different lenders, whatever it is. So yeah, we do a lot of these small tests just to see if there's market demand for something. If there is market demand for it, then we'll throw more resources on it, but only if it stays around our core competency, which is matching buyers with sellers. Matching buyers with deals on the platform.
Do you guys go one step further if like escrow doesn't take off, but lending does? Like, I'm curious to know, like, what did you guys even care, like why this worked versus this? Or is it just, hey, the market demands it, so we'll just keep delivering?
Yeah. Sometimes we'll be like, sometimes something might not work. And we're like, well, did the implementation suck?
Yeah.
You know, like, did we just not let anyone know about it? And then we might throw like send out an email or like, hey guys, there's this new feature. And then like, see, but usually unless people are really adopting it, it's just going to die out. It'll disappear and we'll try something else.
Yeah.
Yeah. You can't force market demand. The market demand
Market will always tell you what it wants. Yeah.
Yeah.
Rob, I feel like you have so much distribution, and marketing is the number one skill in business besides leadership to me, because if you can make the phone ring, you can get everything else to work. Are you taking percentages in these companies that you can drive all this traffic to? Because that would be the first thing that would come to my head. Instead of like getting affiliate, I'd be like, no, like I want a bigger piece of the pie if I can drive 60% of your traffic.
Yeah, I've thought about that, but then it like misaligns my incentives from the users. Because then if I own a piece of one, then I want to push that one. And there might be a new one that comes out that's way better. So I'd rather just take a little rake, cost per lead or whatever, or a percentage of the deal, like small, and keep it small so it's not too costly for my users.
Yeah.
And they just go for the volume. And then that way I'm not like too tied into one or another. I can be more flexible, and whoever has the best services is going to be who rises. Yeah, I like to look at a business kind of as like an organism that's evolving. And if you don't let it evolve naturally in the market, like the market will allow it to evolve. If you start like screwing around with incentive mechanisms, then you can end up in traps that will cost you money. They might make you a little bit of money in the short term, but they will detract from your brand. So I look at brand as a bank account. Every time you have a positive interaction with a customer, you're depositing a little bit into that bank account. And then when you do something that's suboptimal for that customer has a bad interaction, you're withdrawing from that bank account.
100%.
Yeah. So if you start misaligning incentives, you could get in a place where you're withdrawing too much from that brand bank account. And even though you're pulling a bunch of cash, you're damaging the mother brand, the mothership, the big brand.
Yeah, we all agree with that. So you got a unique perspective. You got all this data. You're seeing what people are doing, especially as you're evolving on your data and getting even more insights on it. What are you seeing are the best markets? Is it the big markets? Is it the small markets? I know I've heard from you before about this in the past, so I might your opinion might be the same. I've heard from others on their opinions. But what are you seeing the most successful people doing? Is it the metros that they're going after, the major cities? Is it the smaller markets? What are you seeing?
Yeah, people always want a list, and I'm like, if you want a list, do you want to fish or do you want to learn how to fish? So I could give out fish, but the fish, once you eat them, they're gone, right? So the top markets change on a monthly basis. So the most valuable thing is to learn how to actually think about markets. Now, there's a few different factors that you got to consider in markets. First of all, all, is the price point of properties increases, your assignments increase. So on InvestorF, it's 12.8% of the average sale price of a property is what the average assignment is. But let's keep the math simple. Let's just say it's 10%. Okay, so a $100,000 house, you're gonna make a $10,000 assignment fee. $1 million house, you're gonna make a $100,000 assignment fee. So that would make me think, I just want to go into the most expensive markets, right? But there's another factor at play. Is you go up in price point, the volume of deals falls off exponentially.
Yeah. Yep.
Okay. So you're making more money on one axis, but the volume is decreasing on the other axis. So the question is, what is the sweet spot between price point and volume of deals? And that sweet spot is $100,000 to $400,000 price point. That's where 72% of all assignment fees on InvestorLift are earned nationwide. Okay. Now, I don't like making $10,000 assignment fees. I like to make at least 20 racks if I'm going to wake up and go through the hassle of assigning a deal. So I shortened that down to the 200 to 400,000 range. And actually, I'm a little bit better on sales and marketing. So actually, I'll usually go like 200 to 500 is kind of where I operate. But if you're a newbie, maybe you go a little bit lower. If you're experienced, maybe you go a little bit higher. So that's the price point you want to go after. Then the other thing you got to think about is the characteristics of that market in terms of like population, demographics, things like that. So a lot of people back in the day would say, oh, you should go into real markets because it's so easy to get deals. There's no competition. The problem is the smaller the city, the longer it takes to move a deal. And the higher, so time it takes to sell a deal increases, but also what increases exponentially is your contract fallout rate. There's some counties out there where the average time to sell a deal is like over 90 days and the contract fallout rate are over 70%. And then the average assignment fee is like $6,000. So it's like, do you really want to spend 90 days to have a 30% chance of making $6,000? No, it's insanity. So when we plot all the counties across America where we see a big uptick, anything with a population of about 500,000 or more, you can usually get your deals moving within 30 days. And that's really important for your cash conversion cycles. So personally, if I'm looking at markets, I'm just looking at anything where average sale price is 100,000 to 400,000, population north of 500,000. In general, that's going to be a good market. Now, that will give you a list of your cities or metros or whatever you're slicing and dicing on. Then within those cities or those counties, there are also submarkets within those markets. So if you're smart, we used to do with zip codes on Google Ads. We would, first of all, go look at satellite data. NASA has a site where you can look at like where the lights are on a city at night. And we would just map out all the zip codes where we see all the lights from the satellites at night. So that would be our include. Then we pull up a crime heat map of where's the most crime happening. Then we deselect all the red areas where there's a lot of crime happening. And then we are then left with all the really good areas that are family friendly. We're not going to have a trouble displaying a house. Yeah. Google no longer allows you to target in housing based on zip code because of the Fair Housing Act, but they will still allow you to drop little circles. So you can use the same strategy, but instead of targeting the entire city, you can just drop a bunch of little circles on the map in all the areas that have a lot of houses, but also don't have a lot of crime.
Bro, I love it. We got to highlight you as a speaker at the Deal Champ Summit, second annual.
Come on,
second
baby.
annual Deal Champ
Let's
Summit.
go. The second one.
He's going to be there.
So good. I will talk you guys up a little bit.
I love this story, by the way. It's too good.
Last year, I did 150 flights. 150. I was just so freaking exhausted from traveling. And then we did all these events. But my son was just born 5 months ago. So I promised my wife I will not do any business traveling this year. No more events, nothing. So I made that deal with her. And then Dean calls me up. He's like, can you sponsor the Deal Summit? And I had so much fun at the last Deal Champs. And I thought it was so good. The speaker lineup was so good. The people were so good. That was like, babe, you got to let me make one exception. And I told Dean this, and he didn't believe me. And I literally flipped the phone around. I'm like, babe, am I telling the truth? She's like, yeah, literally. He's not doing events this year. So this is the one and only event that I will be at this year. I love it. It was a ton of fun. It's just a quick 1 hour flight for me, which makes things very, very easy. So this will be my one and only event this year. Super excited to be sponsoring it. It was absolutely incredible last time. I went to the casino and I turned $100, I think, into $3,000.
Let's go.
So I'm going to take that $3,000 back, see if I can turn it into 10,000.
Run it up.
We'll see.
Run it up.
Run it up. Double down.
Run it up.
Double down. It was a lot of fun. A lot of fun. I'm super excited to be there.
Hell yeah, bro. Thank you so much, guys. Do not forget to get your tickets at dealchamps.com/summit. And Rob, where can people find out more about you and Investor Lift?
Yeah, absolutely. Just shoot me a DM at Robert Wensley on Instagram. And yeah, we'd love to connect with you guys.
I love it. Thank you so much for coming on, bro. We can't wait to see you in a couple weeks. Thank you guys so much for tuning in, and we'll talk to you soon.
Let's go.
Awesome.
Thanks for being here, Robert.
Thanks so much, guys. Appreciate it.